Guys, I had a meeting earlier today with an investor on this awesome multi-million dollar deal my partners and I are working on just outside of Cleveland. He asked me about what value do syndicators like me provide to investors like him, meaning why should he invest alongside us in a deal? So before I go into that, I'll quickly explain what a syndicator does. A real estate syndication allows investors like you to pull our cash and invest in large multifamily deals much bigger than you can handle on your own. So this method collectively increases our buying power, leverage, and rate of return. Some of you out there may invest with small investment funds, or some of you may even have access to large hedge funds and invest in large pools of multifamily deals. Others divert your time to working full-time jobs and find deals that way. But if you've been watching for a bit, you know there's a lot more to locking a deal down other than and running it profitably, other than just jumping on LoopNet and sending out a bunch of LOIs. Most of the investors and partners that I deal with are looking to maximize their potential returns from a deal while maintaining their time freedom. That's what's important to them. So here are my 7 value propositions that we offer to our investors. The first is professional infrastructure. As syndicators, we bring the experts needed to locate, assess, and run a property. This means finding and building a team of professionals and covering all the upfront costs associated with this task. So we're talking about commercial brokers, banks, CPAs, attorneys, property managers, bookkeepers, construction people, all of that stuff. So because we're involved with this and other properties, the sheer volume gives us a lot more buying power and it gives us price breaks as we start scaling upwards. An investor trying to go it alone will have a hard time keeping their operational costs down and under control without the scale. The second, underwriting and acquisitions. So we have a team of people that do everything from vetting a market to working with brokers to lock up deals, either on market or off market. After we negotiate a deal, the team will handle the due diligence, the financial underwriting, and even a value add post acquisition. So keep in mind that all this is just on a single deal. There's a lot that needs to happen, and there are teams of people dedicated to getting that property to perform as expected. So the third is access to financing. Because we spend a great deal of time cultivating those relationships, as I mentioned earlier, we work with many lenders to line up the lender with the deal. So not all lenders are a good fit for every deal. So we spend a lot of time getting to know our financial resources and make sure that we give them the deals that they want to take on and pursue. This could be lining up additional capital for a rehab, doing a refinance or restructure, or even getting some additional money to handle some other costs that we don't expect or expect. Number 4 is marketing for private money. When you're handling other people's money, this requires a lot of expertise along with financial and legal resources to get all that handled. And we put together and distribute the PPM, the private placement memorandum, and it's designed to ensure that everyone involved is aware of the risks. It's much similar to what you sign when you take on similar investments and other securities types of documents. The 5th is investor management. When we're working on small deals with a handful of investors or larger ones with dozens of investors, managing this and servicing the infrastructure is very time consuming. So they need to be updated on a regular basis, typically starting monthly in the first 6 months and then quarterly afterwards. That's typically what we do anyway. So while we have technology and management in place, it still requires a team to take on and manage, like say 24 multifamily deals concurrently. The 6th is risk reduction. And this is a two-parter. First, you are investing with other investors in our deals. The investment risk is distributed to all the investors. This allows you to adjust your investment to where you're comfortable, right? As far as how much money you want in the deal. And secondly, we are the legal buffer for the capital investors. So we as syndicators take on the responsibility and the liability involved with daily operations, even from that to handling any legal issues if they come up. Number 7, construction and rehab management. The great thing about multifamily apartments is that the value is primarily driven by the net operating income, not driven by property comps like you'd find in single family. So forcing appreciation by making physical and operational improvements can drive valuation, and in some cases add tremendous value, and especially when it comes to size. That's the big part of it. To do this right, you need effective management of contractors to get them to focus on what they need to do in the post-acquisition plan, as I mentioned earlier. This is the one thing that can make all the difference in the world, from either making bank or losing your shirt. So there you have it, guys. I really like syndication because it helps everyday investors like you pull your money together and get into good sized deals, and of course reap all the benefits that come afterwards. So are you guys syndicating deals? I would love to hear from you. Please leave a comment and let me know. And if you like this, go ahead and share. Thank you very much for your time, guys, and I'll talk to you again soon. Have a good one.